Today, I'm going to talk about 3 ways to use IRAs. Most people are familiar with the term IRA. Most people know that there are advantages to using an IRA, but I want to tell you now very quickly 3 really smart ways to use IRAs to your advantage depending on your situation. The first thing I'm going to talk about is using an IRA as a tax break. Probably familiar with that. You might be surprised by something that I've found out recently. The second thing I'm going to talk about is using an IRA as a growth engine and how that can benefit you. And then thirdly, I'm going to talk about using IRAs as an inspiration. So let's get right into it. Using an IRA as a tax break. A lot of people are familiar with this. And what we're talking about is a traditional IRA or a regular IRA, some people might say. Here's an example. I'm using a single person with an annual gross income of $100,000. That's going to be significant in a moment. All I'm doing is saying this person is maxing out their IRA. That's $6,000 is the maximum that they could put in if they were under age 50, which in this example, that's what I'm using. I'm using 35 as the age here. What does that mean? Well, you can see here at the bottom that the tax that is payable is less when you put money into traditional IRA. That's because you get a tax break for contributing to your IRA. It even lowers that effective tax rate, which is kind of cool. So rather than being in a 14.77% effective tax rate, you're actually 14.31. Yay, everybody likes to pay a little less in taxes. What that means in dollars is that potentially by contributing to an IRA, this person has saved $1,320 in taxes. Great. Here's the sneaky part. You don't get a full tax deduction on a traditional IRA if your income is over a certain threshold. That's what I've brought up here. So if you are married filing jointly, which this person is not, but if you were, that threshold is $109,000. Here's where it's significant in the example that I've got over here. If you are single, which this person is, and your modified adjusted gross income was over $68,000, you don't get that full tax break. You actually wouldn't be saving that full $1,320 in taxes because you're over that threshold. Oh, that's not so great. Well, it also depends if you or your spouse has an employer plan. These numbers are different if you don't have an employer plan. So it gets a little bit tricky into whether you get that full tax break on a traditional IRA or not. So just be aware of that before you assume that a traditional IRA is a great thing. Let's go on to the second thought then. Where could you go if you're not getting that full tax break? Well, think about a Roth IRA. That's a little different. You don't get a tax break today. Instead, you get tax-free growth for the life of the IRA. Tax-free is not something I get to say very often as a financial planner, so I get pretty excited when I can say the words tax-free. So the Roth IRA in this example that I have here actually ends up being worth more to you at the end of the day. Now we're not talking about today. We're fast forwarding towards what you have as a nest egg in retirement. In this example, this person has saved the same amount of money. They've done that same thing where they have maxed out the IRA every year. So $6,000 a year over 30 years in this example. They've ended up saving the same amount of money, but the vehicle was different. So because they saved in a traditional IRA, here's what they have to do. When they get to retirement, they have to subtract the taxes that they will be paying now that they're going to be taking money out instead of just seeing the full amount. So the person who has the Roth IRA can look at that amount. I have $633,326 in my Roth IRA. That's the amount that I can take out in retirement. Over time, obviously, you wouldn't take that as a chunk. But that's the amount that I know that I have. I had a client who told me, Laura, I love looking at my Roth because that number, I know what it is. I don't have to mentally subtract for whatever I think my taxes might be. That's why in this example, the traditional IRA is worth less. Not worthless, but it is worth less money because you have to subtract those taxes when you start taking money out. A little bit of a gotcha that people don't think about. Now, again, to put money into a Roth IRA, there are limitations, kind of like there were back on the traditional IRA, but these numbers are different. So if we go to the single person again, they're going to be phased out of a Roth starting at $129,000, a lot higher than that traditional IRA phase out. So if you are in that middle ground, the example I used was $100,000 as your income, Roth IRA would be the way to go. You get the full tax-free benefit when you retire, as opposed to not getting a full tax break because you make too much money when you're contributing. Kind of cool to think about. Finally, for my higher income earners, don't think that if you make over these amounts, you just can't do anything. You can still do a backdoor Roth IRA. I talked about this concept in earlier videos last year because they were thinking about not allowing it anymore. Oh no. Well, that hasn't happened yet. So you can still do a backdoor Roth even if you make over these amounts. It's a really powerful thing to think about. Finally, as inspiration, you could use IRAs, either kind, as inspiration. Are you inspired when you have a deadline? I know I am. It really makes me take the deadline seriously. I have to do something before a certain timeline. Well, IRA contributions have a deadline. Now, it depends on what type of plan you have. So I've listed several different kinds here. What I want to focus on is we've been talking about IRAs. So that's the middle here. In IRAs, Roth and traditional, your deadline to make a contribution is by the tax deadline. Usually that's April 15th. This year, that's April 18th. Either way, regardless if you file an extension, to make an IRA contribution, you have until that tax deadline. So maybe that's a motivation. Maybe that's an inspiration for you to get that done. Do something good for your future self. Also, the inspiration is their annual maximums. You can't put that much into IRAs. If you're under age 50, $6,000 is the annual maximum. If you're over age 50, including the year in which you turn 50, you can put $7,000 into an IRA. So again, maybe that's a little inspiration that you can only put so much, so you might as well maximize it so that you have the wonderful problem of figuring out where to put more money. And I like talking about that with clients too, but that's outside the scope of today's conversation. So once again, today we've covered 3 really smart ways to use about IRAs as a tax break, as a growth engine, and as inspiration to do something good for your financial health.